Hi there, hope you had a great summer and you're back into the swing of things. Sorry for getting this out a little bit later than I wanted. It's September 13th. Just busy with the kids going back to school and catching up on a few items at work. Nevertheless, the numbers are out for August, and I wanted to go through the numbers and explain what's happening and dissect the data because you hear a lot of stuff in the news and that could be confusing. So here's the stuff that usually you typically hear in the headlines. You'll hear sales are down 34, they call 35%, listings are up 65%, and all that good stuff. But real estate is very local, and I'll walk you through the next few pages and explain to you why it's so completely different. For example, downtown condo market versus the downtown houses versus Markham, Richmond Hill, Mississauga, and the surrounding area. After all, the GTA is 5.5, 6 million people, and it's a vast, big real estate market, and it's really different from for each neighborhood. So the general data that's I'll just go over here, the 416. So you'll see the average detached just under 1.2, semis are 895, and then condos are 540. The changes from last year, so August of 2016 compared to August 2017. So detached is down 1.2%, semis up 15%, and then condo market is on fire at just under 21%. And that's just because there's a lack of supply and it's really affordability. It's pretty much the only option that's affordable in the city in the 416, especially in the core when you're looking at the 540 price range. But we'll break down the data further and I'll show you a little bit more information. So I want to explain sales to new listings ratio. So that's, for example, let's say there's 10 new listings on the market, 5 are sold, so that's 50%, 5 divided by 10. So that's a reflection of the health or how hot or strong the market is. So anywhere from 40 to 60%, that's a balanced market. It's not really a seller's or a buyer's market. If you go above 60%, then it's a seller's market. If you go below 40, it's a buyer's market. So this is to address the media headlines where they say sales are down, the market's correcting, crashing, all that blah, blah, blah stuff. And I say, let's break it down because it's completely different. So I highlighted some numbers for you. So if you look at Brampton, you had 286 sales and 752 as new listings in the month of August. So that's a 38% ratio of sales to new listings. So below 40 is a buyer's market. So Brampton is slowing down or is slow for the month of August, and that's a buyer's market. Mississauga is 44, that's just slightly over the 40%, so it's in the balanced territory. And then if you go down here, I highlight a bunch of suburbias. You look at Markham, Newmarket, Richmond Hill, they're all in the buyer's market range. You look at Newmarket, 24%. That's so if you're looking for a deal, go to Newmarket, but then you'd have to commute for a couple hours into the city. So you can see there it's very different from geographic location to another. Let's get into the city of Toronto. So if you look at Toronto Central, so this is C1 through C15, pretty much inside, call it the core, live outside the core, but it's in the city. Not we're not talking about Etobicoke. We're not talking about the beaches or Leslieville or Scarborough. Sorry, I meant the beach, not the beaches. Some people might get offended. If you look at Central Toronto, it's at 46.8%. So 134, again, this is detached houses. 134 detached houses sold, and 286 came onto the market in August. Typically, August is a slow month. People are using up their vacations. It's the last few weeks before kids go back to school. There's always the CNE the last 2 weeks. But you'll see there the ratio is at 46.8%. That's a balanced market. So actually that was a great time to buy because you can put an offer, possibly negotiate, have some conditions. It was a good healthy market, and this is where really things should be in the long term. This is where a healthy market that appreciates at a normal rate as opposed to the 30, 25 crazy numbers we saw earlier in the year. So that's detached. Let's get into the semi-detached. And again, if you look at overall the city of Toronto, so this is Etobicoke, more of the core, and then you get into the beach, Scarborough, anywhere in the 416, 180 semi-detached properties sold, and 242 came onto the market in the month of August. So that's 74%. So that's an indication that the semi-detached market in the 416 is very strong. And this explains that appreciation at 15% on the first page from August 2017 to August 2016. So again, that sub-market is behaving differently from Markham, from Richmond Hill, from Mississauga, from different pockets of the GTA. If you look at the central Toronto, so this is more into the core, you'll see that 55 sold and 55 came out, so 100%. So that's on fire. That's just pure seller's market. It's being absorbed very quickly. Next, I wanted to show you the condo market. So the condo market, it's pretty big. It's really a market of its own. And I prefer to break it down to C1 and C8. So C1 is west of Yonge Street, pretty much the Dufferin from the lake up to Bloor. And then C8 is Yonge to the DVP, Lake to Bloor. C8 is slightly a smaller market. There's just less condos compared to C1. And then if you look at the ratios, you'll see that it's at 80% and 99%. So again, this is why the condo market in the month of August 2017 appreciated by 20% relative to August 2016 because the market is very strong. So it shows that things are selling very fast at 80 and 99%. And you'll see they're selling at 99% of asking price, C1, C8, and they're just flying off the shelf. So again, it's important to really peel the onion, because if you look at headlines, and let's go to the first page. So if you look at the headlines, sales are down 35%. Okay, great, but what does that mean to your specific neighborhood, or what does that mean to your specific type of investment? I don't want to say meaningless, but it doesn't tell the full story. So it's important to peel that onion and dissect the data to understand the market, I should say the sub-market, and how it's behaving. A few points, actually, I made a couple of notes that I wanted to mention here. So number one is you can't paint all real estate into one brush. And again, the data here, as I broke it down for you, for the month of August, you'll see that it's really different. Condo market downtown versus detached, in the city versus suburbia. So it's important to break down the data. The other thing I want to bring up is the real estate market is a combination of economics and economic conditions as well as psychology. So if you look here, look at this. The GDP in the second quarter, and this is across the country, was up by 4.5%. So that's a strong economic growth, and this explains why the Bank of Canada increased the benchmark rate, which drives the prime rate, twice so far in July and September, because the economy is growing. So if you think about it, when the economy is growing, people have jobs, higher wages, they have stronger confidence to buy homes or condos or places to live or investment properties. Now, the other part is psychology. So the psychology part is the Ontario Fair Housing Plan, which came into effect, I should say, was announced in April. So that was the psychological aspect, because really what it did is it put a lot of people on the fence. They were just not sure what exactly will happen with the foreign buyers tax and all these rent controls and all that kind of stuff. So some buyers decided to opt to sit on the sidelines, and this is why I think the last few months, August and July and June, were good months for buyers to pick up deals, if you want to call them deals, but actually to buy properties at asking, actually negotiate, put in some condition on financing, condition on inspection, and which is the normal thing really to do, because some of the buyers decided to pull out of the market and just sit on the sidelines, similar to what happened with Vancouver's foreign buyer tax. People sat on the sidelines and just wanted to see how those taxes, the foreign buyer tax, works into the system before they decided to jump back into the market. And actually, for the first 2 weeks of September, I should say, well, 10 days since Labor Day, there's been increased activity of listings, which is expected. And I was involved in a bidding war on Saturday. A house came on the market, 2 days, 4 offers, 15% over asking. So stuff is still selling if it's a good property priced well. But the key here is instead of 12 or 14 potential buyers that were there in April or March or February earlier this year, now there's 4 buyers, but still end up going for 15% over asking. So again, don't lump sum all real estate into one paint or one brush, but you got to break it down and look at specific pockets and submarkets to understand what's happening there. The other point I wanted to make is, so the statistics moving forward from pretty much this month, September, when that comes out, till next April of next year, you'll see all those numbers will be negative, and the reason is, the prices and sales activities. The reason is because we experienced record number of sales, record number of price appreciation earlier this year and the latter part of 2016. Everything compared to that all-time high will show a negative, just because the point of reference is record high, and these numbers will show a negative. So again, media will be all over it. You'll see a lot of negative numbers. Sales are down, average price is down, and all that stuff. But again, that is not telling the full story. The full story is to break down the submarkets, the specific neighborhoods, and look at the trend for the last 4 to 5 to 7 years to understand what's happening in that specific area. Hopefully all this stuff makes sense, and if you have any questions about a specific neighborhood, about a specific type of property, please feel free to reach out. Till next month, I'll talk to you soon. Take care. Bye for now.